A huge mistake that comes up in business is something that doesn't actually seem like it's a big deal at all. And that is paying employees or independent contractors in cash. That's cash money, like dead presidents. Here's why. The all-powerful Internal Revenue Service can disallow the deduction entirely, meaning if you paid contractors in the course of your business like $50,000 in cash because, I don't know, maybe they're not legal. Can I say that? Maybe the politically correct term is unauthorized worker. Anyway, if you paid contractors in cash, the IRS can argue that you have nothing to evidence your cash payment. Therefore, you can't deduct the expense on your taxes. This would effectively increase your taxable income by $50,000. That's about $15,000 more in taxes you would have to pay the IRS. Keep watching to find out more. Hi, I'm Noel Lorenzana, your friendly neighborhood accountant. So, paying contractors or employees in cash might seem like an easy way to handle things, but it's not a great idea, especially when you think about taxes and the IRS. For one, when people get paid in cash, there's a bigger chance they won't report it all on their taxes. That means they could skip out on payroll taxes and income taxes, which the IRS really doesn't like. It also gives an unfair advantage to businesses that don't play by the rules. Think about it. Plus, paying in cash makes it very difficult, if not impossible, for the IRS to verify if payment in the course of business was really made or not. Meaning there's no paper trail, so it's way easier for people to lie about how much they made or what they spent. Also, there's a tax filing requirement even if you're paying people using cash. If it's over $600, an IRS Form 1099-NEC is required to be filed with the IRS with a copy given to the recipient so they can report the income on their tax return. Let me tell you a quick story. So, this guy named Jack I know owned a landscaping company in the suburbs. Jack couldn't find qualified workers, so he eventually settled on using unauthorized workers. Workers without proper work documents like a social security card or even a green card. He reasoned that these were the only workers he could find willing to do the work. Okay, so he's paying these workers in cash under the table. It seems innocent enough, right? A win-win situation for everyone. Well, it ends up he was audited by the IRS, and guess what? They disallowed his cash payments to his unauthorized workers. He owed the IRS $56,000 in taxes, penalties, and interest. You see, he couldn't actually prove that he paid the unauthorized workers since he paid them in cash. Basically, paying in cash can lead to tax evasion and even fraud. And let's not forget that employees who get paid in cash might miss out on, say, important benefits like Social Security, unemployment insurance, and workers' compensation. So, while it might seem like a simple solution at first, paying in cash can lead to a whole bunch of problems with taxes and the IRS. It's definitely something to avoid if you want to keep things on the straight and narrow. Please share your thoughts with me in the comment section below. I hope you enjoyed the video. Do me a favor and please hit the like button if you found it insightful. Consider subscribing to stay connected. As always, thanks for watching and see you in the next video.